Hey everyone, this week's video is all about health savings accounts or HSAs, one of the only still triple tax savings accounts that is out there. Now, there is a caveat. There's always a caveat in personal finance. And if you're in California, there is a little sneaky tax on HSAs. I'll talk about those here at the end of the video. But first, I'm Joe Stenovic, Certified Financial Planner with the Wealth Manager Group. And this week, we're going to talk about the changes that are going into effect for HSAs or health savings accounts going into 2023. So as we all know, inflation is a thing, and hopefully it starts rolling over, which I think it will. But anyways, the point being that because of inflation this year, the IRS has increased limits, contribution limits across retirement plans. Like 401k contribution limits have gone up for 2023. IRA contribution limits are up for 2023. So are HSAs. I haven't heard much being talked about the recent increase in HSA or health savings account contributions going into the new year. So that's why I'm making this quick video. So I'll put it up here, but basically individuals, you can put an extra couple $100 into your HSA going into the new year. A family, same. An extra $450 for a family health savings account contribution limit in the new year. The catch up for those that are 55 or older, that's the same. And then you can see some of the other changes that are going into effect for the deductible limits and maximum out of pocket limits, all that. So point being, HSA contribution limits are also going up. So make sure that when you are making those 401k deduction changes in January, that you also slightly increase your HSA contribution as well. Two more things, okay? Number one, still on HSAs and the contribution. So as we know, health savings accounts, you can invest that money, okay? And the advantage of investing it is that it grows tax deferred. And if you use the money later for health related expenses when you take it out, it's tax free. So the contributions are not taxed, the growth is not taxed, it's 100% tax free. So you get a deduction on putting it in, that's tax break number one. It grows tax deferred, tax break number two. It comes out tax free, tax break number three. That is why the HSA is the only true, I would say, triple tax savings strategy that's out there. Now, what's really important is that you actually invest the money. Okay, so I see this all the time with my clients that come on board and we're reviewing all their benefits, and we come to find out that they've been contributing to the HSA, but they haven't taken the action to set up the investment account to filter the cash that they have set aside. They haven't filtered it into the financial markets because there is a couple steps that you need to take in order for that to happen. Because an HSA contribution will go to an account, to a savings account basically, but then you need to go in and set up an investment account that is the sponsor basically with your employer, and make sure that the money that's set aside is moved to the investment account. So you need to log in. I would suggest you log in, see if you've done it. Some people don't necessarily know if they have or not, and make sure that money's getting invested, okay? Very important. And then lastly, California, this is something that I don't think a lot of people realize, but earnings on HSAs, so like let's say you invest, you have $5,000 in your HSA, it grows to $6,000. So you have $1,000 of earnings and you rebalance, do some sort of trade that results in that $1,000, or maybe you're gonna go take the money out to use it for medical. So there's $1,000 of realized gain. Technically, yes, it's tax-free, but in California, they don't recognize HSA earnings as tax-free. So you still have to pay tax on any time that you make a change or you get a dividend even in your HSA. California, not federal, but California is still gonna tax that money. Yay, California. That's all for this week. Any questions, feel free to reach out, and have a great rest of the week. Take care.